Hello financial fans, going to talk a little bit about valuation. How do you know if a stock that you're buying is overvalued, undervalued, or fair value? Well, Yahoo has some wonderful financial pages and we'll be looking at those pages. And I buy and sell NYSE and NASDAQ stocks. I'm not a financial advisor. I'm a person who buys and sells stocks, and I'll show you the way I buy and sell them and the way I analyze them. And if you are a person who buys stocks that are on the NYSE or the NASDAQ exchange, well, the Yahoo pages are a wonderful source of information. We're going to start looking at the valuation of a stock, and we're going to begin with Amazon. I do own Amazon stock, and the symbol is AMZN. So let's get started and take a look at Amazon and analyze its value. And we'll begin analyzing Amazon. AMZN is the symbol. This is the page we usually show when we analyze any stock, and Yahoo does give a lot of information on this page. We have the price up there in big numbers, $3,318.12 per share. And we have things like the PE ratio, which I value a lot when I go to look at a stock. In this case, 57.48. That's a high PE ratio compared to the stocks I like to buy that have a PE ratio near 10. The lower the PE ratio, the better I like it. But there are other ways of figuring out the value of a stock. And what we'll do, we'll look at the links that are below the price. Up there in the upper left hand corner we see the price, $3,318.12, and under that we see the word summary, company outlook, chart, conversations, statistics. There's all kinds of information available for Amazon, and one of the things we'll look at is statistics. And when we go to statistics, we see market cap, enterprise value, trailing PE, forward PE, and the PEG ratio. That's all down there in that left hand column. And the PE, which I look at, the PEG ratio, I rarely look at, but I probably should look at more often. The PEG ratio adds one factor. We have the price and the earnings and then the expected growth. If one stock is growing more than another, it will have a lower number that they use for the PEG number. The closer you can get to one or two, and in this case the current PEG ratio on a 5-year expectation of 1.82, which is pretty low. And so Amazon looks good with, regardless of what the PE ratio is, up there almost 60. The PEG ratio looks pretty good because Amazon makes a few bucks as it moves forward, and it grows and it gets bigger and bigger. And you can find information like that at Yahoo. You can dig pretty deep into a company at Yahoo. For example, this is the analysis page that tells the number of analysts, and for the current quarter, for the next quarter, for the current year, for the next year, the average estimate, the low estimate, the high estimate, these earnings per share. So you can really find out all kinds of information if you have the time to study it like you would a school subject. We'll go now to Facebook. Facebook is something I'll probably buy some more of. I already own some Facebook. By the way, I also own Amazon. I do own Amazon stock, and I own Facebook stock, and I'm not a financial advisor. I'm just showing you that Yahoo has an awful lot of information in case you are looking for information on a stock. I would recommend going to Yahoo first. I also sometimes go to Google Finance, and I also use my broker TD Ameritrade. They have some financial information. And also I read the news, news about whatever company you're looking at, there's always a business section somewhere that has whatever the latest information is regarding any company. But here we have Facebook, and we see the PE ratio for Facebook, third item down, middle column, 27.06, and they expect, down at the bottom of the middle column, 1-year target, they expect it to go up to $410.02. That'd be a nice move upwards. And at the bottom of the column on the left, we see that Facebook is considered to be undervalued. And this is Facebook's chart. Looks like almost as smooth as some of the escalators I've been on. It goes up, 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 just like Mount McKinley. And you can find all sorts of things at Yahoo, and how they gather all this information and get it into its slot each day, I have no idea. This is McDonald's. Now this is about as famous a company as you will find, and they're waiting for the COVID situation to just go away, then they can open up the restaurants and have people eating inside and so on. But for right now, their PE ratio is 25.79. Their dividend is 2.16%, and they're expected to grow nicely. 1-year target 265.47 from the current 236.95. And we look at PepsiCo, PEP. Their PE ratio, third item down, middle column, 26.11, and their dividend and yield, it's not enough to attract me to buy Pepsi at this point. 2.77% dividend and 1-year target 165. Okay move up, but not anything that would make me want to buy the stock right now. And we look at Pepsi's PE and PEG ratio, and we see that the PEG ratio for Pepsi is over 3, and back on 12/31 of 20 they had almost 4. So there again, it's not attractive enough that I would go rushing to buy PepsiCo. But again, maybe when the COVID restrictions are lifted, hopefully soon. I have no idea what the situation is with that. We might still be under lockdown for a long time to come. But Pepsi and Disney and Carnival Cruises, all sorts of companies would benefit when people can gather and do the things that are used to be normal. They're not quite normal right now, but anyway, that's a look at a way to gather lots more information on any stock that you're planning on buying or selling. And I just highly recommend Yahoo Finance. I don't get paid anything to say that, and I'm not telling you to buy any of these stocks. I wish you great success in your investing, and I thank you very much for watching.